What's up everybody, I am Jaspreet Singh and the housing market is getting hit and renters are paying the price or getting kicked out of their homes. The newest Census Bureau data just came out and it shows us that 8.5 million American renters were behind on their rent as of late August 2022, and 3.8 million tenants are either somewhat likely or very likely to be kicked out of their homes or evicted within the next 2 months. So what's causing all of this? Is it greedy landlords? Well, I'll talk about that in just a little bit. But you also have the inflation issue where now regular people, tenants, homeowners, everyone has to pay more money for things like your gas, for your groceries, and for your food. And so when more and more of your money is going to buy your basic stuff, you have less money to pay for your rent, while at the same time, rent prices have been growing at some of the fastest rates we've ever seen. Since the beginning of the pandemic, rental prices have gone up by about 25%, and over just the last 12 months, rental prices have gone up by 15%. So if from the beginning of the pandemic and now your rental cost has gone up by 25%, but your wages have not gone up by 25%, well, that means a bigger chunk of your income is now going to pay for your rent than before, meaning you have less money to spend on other things, less money to save, less money to invest, less money to buy groceries, and so you have to squeeze more and more pennies out of this pie because the price of everything is growing faster than your income. I mean, for the first time ever, the median rent on an apartment listed in America right now just passed $2,000 a month. So there's three things that I need you to understand. One is, what's the real cause of this, that way you can understand what's going on. Second, what do you do? And third, you want to understand what's coming next. The reason why tenants are struggling paying their rent is because of inflation. There's inflation of everything around you, including inflation of rental prices. So we already talked about the inflation of everything else around you, right? The price of your gas, your groceries, your food, your vacations, your everything is more expensive now than it was a year ago, 2 years ago, 3 years ago. But it's also the inflation of your rental prices. Now, this is where everyone says it's the greedy landlords that's causing inflation in rental prices. But it's the same argument for inflation at the grocery store, inflation at the gas station. There's a reason why the price of everything has been going up, and it ultimately comes down to the money printing, because the money printing has caused the devaluation of the dollar, causing the price of things to go up. Because now when you want to go and rent a home, well, the landlord also has higher costs because now property taxes are higher thanks to the higher property valuations. That also means insurance costs are higher. That also means the maintenance costs are higher. That also means that all the other costs associated with managing and dealing with a rental property are also higher. Now, does this mean that a landlord's costs have gone up in proportion directly with the revenue? No. In many instances, landlords, especially if you owned a property for a number of years, are making more money today than they were a few years ago, because if the market rents have gone up from $1,500 a month, say, to $2,000 a month, and your monthly costs have gone up by, say, $200 a month, well, if the market rate now for your unit is $2,000 a month, you're not going to charge $1,500 a month because the market rate is $2,000. So now you're getting an extra $300 a month in profit because now you're able to raise your rent from $1,500 a month to $2,000 a month because that's the market rate. I mean, if you could sell a glass of water for $1, but everybody around you is paying $2, what are you going to charge? $1 or $2? I'll let you answer that question. This brings me to the topic of what are you going to do about it, because there's three different things that you can do. And the first one that I want to talk about is now how you can be on the winning side of the equation. And in this case, that would be by being the landlord instead of being the tenant. This is where now you want to be the producer instead of just the consumer. The people that are most benefited in this system, the reality is you have to be an investor, you want to be the owner, you want to be the producer. Those are the people that are going to get disproportionately benefited, and this is where you want to start changing your mindset and be on the winning side, where now you can be the owner, the producer, and the one that's actually getting the benefit when inflation happens. At this point, you're probably thinking something like, but Jaspreet, I can't even afford to own my own home. That's why I'm renting. How do you expect me to go out now and magically buy a rental property when I can't even afford to own a home myself? Well, the first thing is now you've got to change your mindset, because you got to believe it's possible for you. because if you don't believe it's possible, it is never going to be possible, because there are so many ways to start investing in real estate, for example, even if you don't have a ton of capital. But it requires you to be more creative, and it requires you to start working for that goal. And even if you don't want to be a real estate investor, you can at least start investing with $1 or $2 or $10 or $100 or $1,000, not necessarily in real estate, but investing your money into places that now get benefited when inflation happens. Where are places? Well, things like real estate, the stock market, cryptocurrency, startups. There are so many different ways for you to invest your money, and it's so much more accessible now than ever. And this is where now you can get some of the benefit when inflation happens. Like the people that started investing their money in 2020 when the pandemic hit, they got to see a big boom in their money, because as soon as the pandemic hit, the Federal Reserve Bank opened up the money printer, and then they started filling the markets with inflation, which caused the stock market to rally, and the people that were buying got to make huge profits because of it. Cryptocurrency is obviously a more speculative way to go. If you're trying to just get rich by investing in cryptocurrency, I do not recommend you go into cryptocurrency. You might as well just go to a casino at that point. But if you do want to invest your money in cryptocurrency, if you like the value of the blockchain, especially for the long term, then if you want to do that, that's fine. But just make sure you take your cryptocurrency off the exchange. Don't keep your crypto in an exchange, especially when you're in these types of volatile markets, because when your money is in the crypto exchange and it's owned and controlled by the exchange, sure, maybe you own it, but it's controlled by the exchange, because if the exchange goes under, your cryptocurrency is gone. So make sure you pull your crypto out of an exchange, put it into a wallet. That way you are protected. Now, if you're looking for a good exchange to use, you can check out our sponsor, FTX US. I like FTX because, one, they make trading crypto super simple. You can dollar cost average your way into cryptocurrency. Like I buy crypto every single day. It's super easy to do that. You just got to push a few buttons. And the fees on FTX US are so much lower than pretty much every other major brokerage out there. So now more of your money can go to actually buying you crypto instead of just making your brokerage richer. And the nice thing is that now on FTX US, not only can you trade crypto and NFTs, but they also just launched a feature which also allows you to trade stocks right off of their platform. So if you want to invest your money, and even if you don't have access to $100,000 to go out and invest in real estate, well, now you can also invest in stocks. Even if you only have $100 to invest, thanks to FTX US. So if you want to learn more and see how you can get started, I'll put the link to how you can do it down in the description below. And the nice thing is that if you use my referral link down in the description, and then you enter in my referral code, minority, FTX US will also give you some free crypto when you trade $100 worth of crypto on their app. So if you want to learn more and see how you can win some free crypto, just enter in my referral code and use my link down in the description below. So the first way that you can protect yourself from higher costs is just by investing in money. This way now, when rental prices go up or gas prices go up or grocery prices go up, you can also get some of the benefit, because now you're the producer instead of just the consumer. The second way that you can protect yourself is just by earning more money. And this is one of those things where, yes, it's going to require more work, but it can allow you to have more money to afford the lifestyle that you want. Now the question is, how do you earn more money? And this is going to depend on you, your goals, and your lifestyle. Because either you can continue to work harder at your job, try to earn a raise or a promotion or a bonus or something where you can earn more money at your job, where you can provide more value. Talk to your boss about it. How can you provide more value to earn more money? Second, if you don't want to do it at your own job, maybe you can get a second job. And you're going to say, but Jaspreet, I'm already working so hard. Well, yeah. But if you want to earn more money, a second job can potentially help you with that. If you don't want to do that, maybe you can invest your own side hustle. If you have a product idea, something that you want to do, if you have a talent, a skill, something that you can do on weekends, on evenings that we can earn more money, that's another potential option for you. Or you can try to start your own business. Now again, this is going to depend on you, your lifestyle, your risk tolerance. How dedicated are you to building something? Because I can tell you from experience, building a business is hard work. It's not something that you can just do a couple hours a day and expect to make millions of dollars. It takes a lot of work. And I know there's a lot of people on the internet that talk about how you just got to do these 6 steps to make 6 figures a month. It's not that easy, okay? You got to put in a lot of work. You're going to have to learn a lot. You're going to have to get punched in the face. You're going to have to go through a lot of ups and downs if you want to build and make it in business as an entrepreneur. But it is an option for you. And so now if you can earn more money, you have more money, but you want to make sure that you're not just spending all of this extra money. This is where we start to run into those traps where you can make a ton of money but still be living paycheck to paycheck because your expenses and your lifestyle are now magically keeping up with all of your new income. This is where you want to keep your expenses small. That way you have a margin. That way you can invest your money. That way now when you have money to invest, your money can be making your money. That way you can actually become wealthier. That is the key to becoming wealthy. It's by putting your money to work. It's not just by earning more money or by cutting your expenses, which is actually the third way that you can also protect yourself, is by cutting your other expenses. This is the least fun thing to do, but it is the most accessible thing to do. That if you're really struggling, you don't know how you could continue to make all of your expenses, figure out ways for you to cut some of your expenses. Find ways for you to eat out less. Don't go to a restaurant so often. Find ways to go on less vacations. Find ways to downsize, sell your car. Find ways to sell things around your home. That way you have extra cash to continue funding your lifestyle. Now I'm going to say this again. This is not the funnest thing to do, and this isn't always the best thing to do because, you can only cut your expenses by so much. There's a limit to how much you can cut your expenses. You need to know how to live below your means, but this is where earning more money can have more value, because if you know how to earn more money and you can live below your means, now you have more money to do the first thing that I said, which is actually investing your money. So it's like a trio. You want to spend less, earn more, so you can invest more. Going over the three things that I just talked about, because that's how real wealth is built. And when you do that, a $500, $200, $100, $1,000 monthly increase in your rent is really not that big of a deal. It is what it is, because now you're working on building your wealth and you're not worried about these little costs that keep growing. You want to worry about the dollars, not the pennies. And sure, rental prices going up by a few $100s a month is dollars, but you're trying to work on the bigger dollar figures. That way now you don't have to worry about the small little costs. You can worry about the big income checks that are going to help you fund and live your lifestyle. This brings me now to what's coming next, because this is where things get really interesting, especially when it comes to the housing market and the rental market. So right now we're in a situation where the Federal Reserve Bank is working to raise interest rates to fight inflation. One of the byproducts of that is that mortgage rates are going to go up. One of the byproducts of mortgage rates going up is it's more expensive to buy a home at the current prices. One of the byproducts of that is that typically home prices will have to fall because home affordability goes down, and so home prices go down while mortgage rates go up. Now, the question is, how does that affect home affordability? Maybe home affordability goes down more, maybe home affordability goes up, because it just depends on the dynamic and the balance between home prices and mortgage rates. But now you have to think about this, if you're focusing on the rental side as an investor, what does that mean to rental properties, apartment complexes? Because now, just like with everything else, when interest rates go up, the cost to borrow money goes up, which means now as an investor, I need a bigger return on my money in order to justify buying, say, an apartment complex. Because if an apartment complex is on sale for $1 million and I'm going to borrow $800,000 or $700,000 to buy this $1 million complex, and I can borrow this money at 4% a year, well then I only need to make sure that I can make this 4% mortgage plus all of my other expenses. But if I have to borrow that money at 8% a year, now I have to get a bigger return because I'm going to have all my other expenses, my property taxes, my insurance, my maintenance, my management fees. But now my mortgage fees are double what they were before. At an 8% mortgage, it's a lot more expensive than at a 4% mortgage, which means either I need to be making more money as the apartment owner, or the price is going to have to come down. And this is where you're going to see that dynamic between pricing versus the actual cost. Because right now we're in the situation where prices are starting to fall. And if prices start to fall, that will eventually trickle down into rental prices if the economy continues to slow. Because then, if you look at what happened in 2008, we ran into a situation where tenants just couldn't afford to pay the same rents. And you did see for a little period where rental prices fell, because now, same thing, supply and demand. Now, it was landlords that were fighting against each other to find a tenant, because now there was all the supply out there. People were selling their homes. We all know about this. We had foreclosures and all that going on. But landlords were also fighting to find a tenant. It was a completely different market dynamic than what we have now, where tenants are fighting to get an apartment. Now it was apartments fighting to get tenants. And so in that situation, yeah, you bet apartment complexes and homes and landlords were cutting their prices in order to get somebody into their home. That way at least they could cover their costs. And so those types of situations happen when you see home prices fall, when you see housing markets fall, because it does create a shift in demand and supply. So those are the things that you want to pay attention to, because if interest rates continue to go up and it continues to hurt the housing market, and you start to see home prices fall, and the demand to buy a home and the demand to rent a home falls below the supply, well then that can completely shift the market, because now you're going to have the landlords, not just the home sellers, but the landlords that are competing for a tenant. instead of just the tenants competing against each other for an apartment unit. And so this is where you want to pay attention to what's happening, because it ultimately comes back down to interest rates and how aggressively the Federal Reserve Bank is going to raise interest rates, and what the Federal Reserve Bank is going to do if we do fall into a deeper recession, into a recession that's hurting the housing market, and how bad it ultimately gets. Because if the housing market continues to get hurt over the next 12 to 18 months, you might see rental prices start to come down with it as well, because now landlords are fighting against each other to bring in a good tenant. The price of anything, whether it's real estate or stocks, or it doesn't really matter, depends on supply, on demand. When you have a lot of supply and no one wanting to buy the stuff, now the sellers are competing against each other to sell their product. In this case, the housing market, which means that they would have to cut their prices.